Jonathan Melmed, partner at Morrison & Forster, where you are co-chair of Global Private Equity and co-chair of Global Energy and Infrastructure. So nice to see you.
Likewise.
Again at the Deal Economy. Lot to talk about, and we have a new administration coming into D.C. What is going to be the impact on inbound private equity deal making, particularly in the U.S. and Canada?
Again, folks are of the view that there may be less inbound private equity / investment work into the U.S. from certain foreign countries. The primary exception is that sovereign wealth funds, pension plans are somewhat immune to the higher U.S. predicted dollar. So we expect, the sovereign wealth funds out of Asia, as well as Canada, Australia, that do not have the LP fundraising pressure to continue to exploit opportunities in the U.S. where some of the international private equity funds may be more wary.
Now, in terms of sectors that you follow very closely, what is the potential impact on infrastructure and separately renewables?
Sure. So I think that within the infrastructure area, and it's a broad term, it includes utility scale renewables, infrastructure in the sense of core, toll roads, bridges, airports, there is great optimism. The president-elect has spoken about increased P3, public-private partnership capital. Again, they are complicated transactions. They're usually RFPs that go out to a multitude of potential investors, and they're hard to win, and there's a lot of potential broken deal costs associated with those transactions. That being said, there is optimism that in light of the ostensible $1 trillion commitment, that there'll be more of those transactions.
And for renewables?
And for renewables, there's greater consternation. The applicable federal government tax credits have been extended.
We certainly have seen natural gas take off in the U.S. What is the outlook for that in 2017?
So natural gas is envisioned to be very busy. Next year, it was quite busy this past year. I happen to have worked on 3 of those large transactions. We expect, again, with the president-elect's desire to increase investment in natural gas, that to be a very busy area for us all.
And how about hydroelectricity?
Hydroelectric transactions we think are going to continue. They're always very competitive. They're very coveted. They're often very large transactions. The challenge for traditional private equity funds in that area is that some of the, again, international sovereigns, pension plans or pension plan-like entities like Brookfield Energy have a competitive advantage insofar as the applicable returns on investment that they seek are somewhat lower, more patient capital, not the same pressure to return, and they are better positioned to acquire these large hydro transactions. That being said, ArcLight, as of a week or 2 ago, did buy a $1 billion plus one.
And what about valuations? What do you expect there for the energy group?
In terms of valuations, generally we expect them to be a little bit depressed in utility scale renewables. Certain sell-side auctions we've seen actually postponed a quarter or 2 to see how the market plays out. Valuations continue to be frothy and will continue to go up in natural gas / hydro.
Jonathan Melmed, always a pleasure to see you. Thank you
Likewise.
so much.
Thank you so much.